I've noticed we have a lot of brand new traders around, and I thought it was time to make a video to explain to you what in the world we're really talking about. Because one of the really great things that is available to us that I didn't even know about when I started this as home retail day traders that don't have access to massive amounts of funds are some really highly leveraged products. And that's how people like me are able to use a relatively small amount of money to make an actual income, and actually generally a pretty nice income once we kind of get in the groove and figure out where our strengths and weaknesses are as a trader. So it is a journey and it is possible, but part of what you need to know is where to start and what kind of things that we're even talking about, because I know it sounds crazy when you're coming in here and you're looking at Apple and it's $200 and then it moves up to 202 and all these people are really excited and you're like, how are you doing this? I mean, it seems like you have to have $100,000 or $1 million or something like that, and you actually really don't. In fact, I started out with the I feel like it was the world's smallest account, but I started out with a 3-figure account, and so I know this is possible. And I did it using some special products that give you a lot of leverage with. So basically, you don't have to have a really big account to get a lot of money out of a relatively small move. And you can also lose a lot of money really fast. So you still have to learn all of the essentials. And all the essentials isn't just reading charts. It's a lot of looking deep and figuring out how to control your emotions and how to be really disciplined and really take this really seriously. That's a lot harder said than done. But I'm going to tell you about the 2 ways that I can get a lot of leverage in the market, and that's with stock options and futures. I'm going to start out with options. That's actually where I started trading, but then I'm going to also tell you why futures are probably maybe a better place to start. And this isn't going to be a super extensive video because we could talk about each one of these little topics forever, and I will if you want me to, but in this video, we're just going to kind of cover the basics. So what is an option? So I'm going to take you over to Tasty Trade's website. They're a specialty options broker, and they have a lot of really great resources on their website. Their platform's great too, but even if you just kind of look around their website, you can learn a lot. I'll link all of these links that I share with you so you can go check them out in more detail since we're just kind of skimming. But basically, an option is a contract to buy a stock at a specific date for a specific price. And that contract has its own value, but it's going to control 100 shares. So it's going to be the option to buy a stock like Apple for a price like $200 on a date like next Friday. You can do a lot of really complicated things with options. You can straight up buy and sell them like you would a normal stock, and you can also sell them and short them and do combinations where you're buying and selling different strikes and dates and things at the same time. And they can get really complicated. So I'm just going to start today and kind of explain what you're kind of already familiar with buying and selling stocks. And that's going to be if you would just straight up buy a call or put option. So you buy a call option if you think the price is going to go up, and you buy a put option if you think the price is going to go down. And they have this value, and that's what I was talking about. The premium is what it's going to be called. They have a value that is independent of the underlying stock, like Apple. This contract is going to have its own intrinsic and extrinsic value. You do some calculations and you come up with the actual premium, and that's what they're going to be charging. This changes throughout the day, and it's affected by time and price because it has an expiration date. So the closer you get to that expiration date, the more volatile it is. And it does sound really complicated. It can get really complicated. It's not that bad, but there is a lot to understand. And so these are all the kind of things that you need to learn about if you're going to trade options. But basically, an options contract is going to be in the money, out of the money, or at the money. And what this means is if you have an options contract for $200 for Apple, that means the strike price is $200, the underlying is Apple, and that means you are going to buy an option to buy 100 shares of Apple at an agreed upon price. And then it's going to have an expiration date, and that's the date that you have to either exercise your option by buying those, or the broker can potentially assign that to you. And that strike price, that $200 strike price, can either be in the money, out of the money, or at the money. At the money is if Apple is at $200. If it's out of the money, that means that Apple's below $200. If it's a call, let's say it's a call, you think price is going to go up. This is the way it's easiest to think about if you're used to stocks. So if we're in a call option and we want price to go up, then it's going to be out of the money if Apple's below $200, and it's going to be in the money if Apple's above $200. I hope that makes sense. So a put option is going to be the opposite, and that means that you want price to move lower. So a put option would be in the money. If it's a $200 strike put option, it would be in the money if Apple's below $200, and it would be out of the money if Apple's above. Now, when we're talking about the premiums, they can change a lot over time. And so that expiration date is really, really important. When we're speculating as day traders, we are usually not wanting to get assigned, and we're not planning on exercising. We're just speculating. So in general, we're going in and out really quickly, and we're looking for a big move in that option premium. And that happens when price spikes at the right time in price, then there'll be a spike in that premium as well. And that's what we're trying to capture as options traders. So like I said, Tasty has a ton of information on their website, and it's definitely a great read. So you can kind of understand how all of this works. And so again, the calls, if you want to go up or you want to put it down. And again, you can short these and do all kinds of complicated strategies with different dates and strikes. And that can end up making some passive income, which is kind of nice. But, basically, what you need to understand is that you can control 100 shares of stock with a much smaller amount of money. The idea is you would make money if you buy a call option for Apple at $200 and Apple goes up to $210, and what you paid on that premium is less than that $10 times the 100 shares. Then you make money on that there, and you could potentially own the Apple stock. But, as speculators, we're not worried about that. There is a little bit of a shortcoming in this system. The SEC can kind of be a pain in the butt sometimes, and they've decided that in order to day trade stocks or options, you need to have $25,000 at least just sitting in your account, and your account needs to be worth at least $25,000. And not all of us have that. That's a lot of money for a lot of people to start out with. And what they consider a day trade is if you open and close a trade in the same day more than 3 times. You can do it 3 times. After that, you're done. You can do it, but no more than 3 times in 5 days. That can get a little bit tricky, because if you want to buy 3 Apple call options, but scale out and sell them at different prices to make sure that you can get your targets filled, you can end up having that counted as 3 trades depending on your broker. There are kind of some different ways that you can get around that, so we'll talk about that a little bit. But one of the ways that a lot of us get a lot of leverage in the market without dealing with those SEC rules is by using futures. So futures is kind of similar in that we're dealing with contracts. We're speculating by buying and selling these contracts that are an agreement to buy some sort of asset or commodity at a date. So these have an expiration date. But unlike options, these expire every quarter, and in general, you just roll into the next one if you're someone that holds it. But most of us aren't, because of the way that margin works, and we'll go into that shortly. But you don't have futures on all these different stocks like you do options. So there will be options on just about every popular stock, like Apple and Tesla and Walmart and Costco. They're all going to have stock options, and you can speculate on those. You can also speculate on index options. Like, you can't trade the actual S&P 500 index or the NASDAQ index, because what those are is a basket of stocks. And we have a lot of overlap in them in things like Apple and Meta, Microsoft, Nvidia. All of those stocks are heavily weighted in both of those, but they're an index, and you can trade them by using an ETF or options on that ETF, like the SPY options or the SPX options, those are the ticker SPY, SPX. Those are options on the ETFs that are actually holding that basket of stocks. And you can trade those options on the S&P 500, but you can also trade the futures. You can trade futures on things, all sorts of things. You can trade futures on corn or crude oil or gold and silver. And then you can also trade the future options on the indexes. So if we're talking about, it makes a little bit more sense if you're thinking about something like corn. So a future contract is agreement to buy that thing at the expiration date at that price. So the difference here is the corn futures is just going to keep moving and moving and moving. So whatever price you buy it at, it can be worth more or less by the time that contract comes to expiration. That's not how much most people are using these. Most people are literally just speculating on them. So on the S&P 500, for instance, these expire every quarter. So the value of the ES futures contract, which is the ticker, the ES is the ES for most brokers, it'll be ES for the S&P 500 mini futures. And what that is it's the price that we expect that index to be at the expiration date. So at that quarterly expiration, this is the price that we expect it to be at. So we will roll or switch over what we're trading every quarter. Us home retail traders are not holding these and swinging them overnight, because let's take the S&P 500 for instance. It's trading around 6,000 points right now, and the contract unit is $50. That means in order to get the notional value of an ES futures contract, we multiply the index, which is 6,000, which is hovering around 6,000 right now, by $50. So 50 times 6,000, the notional value of one S&P 500 contract is about $300,000. And you're like, what the heck, Barbie? You just said that we were getting something that us home retail traders can afford. And we can. And I'm going to explain that to you in a minute. But this is where we're getting our leverage. The notional value of this is $300,000. And there's ways that we can trade this for less than 25,000, actually significantly less. But let's talk about kind of what the value is and kind of why you might want to trade these. So the options contracts, a lot like stocks, you are, for the most part, you're going to be trading those during the New York Stock Exchange hours. And these ES futures contracts, and most of the futures contracts in general, but definitely the ES futures, the NASDAQ futures, and pretty much anything else that I mentioned, are going to trade 23/5. So that's 23 hours a day, 5 days a week. And the most volume and the most liquidity is going to be during the New York session, especially in the morning. So when the New York Stock Exchange is open, and that's because that's when most traders are there, and we have some overlap between these global markets. The reason that they open up at night is they're actually opening tomorrow's market in Asia tonight. And so that's how the S&P 500 works, is it's opening in the global markets before it opens in ours, but we can go ahead and participate in that market just like they can participate during our hours. So what I mean by liquidity is, do you want something as a day trader, and especially as a speculator, that you can get in and out of really quickly? And if you're going to buy or sell something, you need someone on the other side of that transaction. If you notice, if you put something on eBay, there's no buyers for that option, nobody's going to buy it. It's the same in these markets. If there's no buyers, nobody's going to show up. You want something where a lot of buyers are participating, and that's what liquidity is. That's when we're talking about volume. That's the volume of transactions. If there's a lot of volume, we know that there's a lot of participation and a lot of people there that we can play with. And there's a lot of volume on things like the S&P 500 indexes in these ES futures and NASDAQ futures, as well as the big options. So some of the options contracts are not going to have any liquidity in them at all, but the big popular ones, like the ones that track the index ETFs, like I mentioned, the SPX and SPY, or QQQ for NASDAQ, and the big tech stocks, we call them the Mag 7, the Apple, Amazon, Tesla, Meta, Google, Microsoft, and Nvidia. Those are going to be the ones that are the most popular to trade. So we have the most trading buddies that we can exchange these with. And we have that most during the New York session where we have that overlap. So a lot of people think, well, it's futures. They're open 23/5. I should trade them at night, but they're actually really, really great to trade during the New York session. And that's when they're really powerful. But we can get overnight moves that we get to participate in as well. But none of that matters if we can't afford it, right? So let's go into kind of how these work a little bit more. And for that, I'm going to go over to NinjaTrader. And this is the platform that I use for trading futures. And they are a specialty broker for futures. And I can get some good information on their website. So I'll link this one as well. But the way that these work, and I just showed you the contract point value for an ES, is they don't go up by little pennies like you're used to seeing on stocks and things. Instead of going up by these little penny moves, they go up by ticks. And it varies depending on which futures product you're looking at. Like the Nasdaq's going to be different, but we're looking at the ES for the S&P 500 right now, and that moves in quarter ticks. So every quarter tick, it's always going to move by a quarter tick. There's no 17 cents on ES futures. It's always going to be 0, 25, 50, or 75. And each one of those ticks is worth $12.50. So if it moves a quarter point, that's $12.50, either gained or lost. So it happens really quick. And that sounds really hard to do that math in your head. I don't. I just think 10 points, $500, and then it's real easy. And I can think about that real fast. So if you go pull up an ES contract at a traditional broker like Schwab or Fidelity or E-Trade, they're going to want you to have a pretty significant amount of margin in there. It's probably going to be for ES right now, $14,000, maybe even 15 more, something like that, to just initiate and to get into this position. Now it's really, really simple. If you think the market's going to go long, you buy and then sell once you want to get out. And on the flip side, you sell if you think it's going to go down, and then you buy when you want to close it. And so we're not worrying about dates and things. We're just trading the current contract, the one that has the volume on it right now, and keeping things really simple. But at these brokers, if they're going to want you to have that much to control one of these, it's not really going to work. But that's why we're over here at a futures broker, and there's a lot of different ones that you can pick, but look for one that has a really good margin rate. So what I mean there is how much they need you to have in your account to control one of these. So I told you the notional value is about $300,000. Your traditional broker may want, $14,000 for you to enter into that long or short position on the futures contract for ES. But actually, the futures broker that specializes in future has a special deal. And this sounds like it's a scam. It's really not. There's really credible brokers like NinjaTrader that this is really what their rates are. And the reason that they're doing this is they have some kind of different risk management and things, and they will liquidate your account if you get anywhere near negative real quick. And the other reason that they're able to do this is, again, we're looking at some highly, highly liquid products. So they're not going to get stuck on the hook for it. They're going to get you out of it. And, you can go negative in these. I'm not going to say that you can't go negative in a futures broker, but they have a lot of things that's going to keep you from hitting that like crazy, crazy numbers that were really scary that I mentioned earlier. So it says $500 for the E-mini S&P. That's the ES contracts that I was just telling you. So $500 margin, that means they want $500 in your account to control this. You need to allow for drawdown because 10 points is $500. But in order to initiate that position and hold on to that until close, it's $500. You can't hold overnight without that larger number, but you can speculate it all day long with $500. So that's for the E-mini. And then we got crude, gold, and NASDAQ would be over here too with the $1,000 margin. Maybe that still sounds like a lot, and that's why we have the micros. So CME has gifted us day traders this wonderful thing. $50 controls a micro E-mini S&P 500. So what is that? This is the one with the $50 multiplier. So we multiply 50 times 6,000, which is where the ES futures are right now. This one's 5. So we've divided everything by 10. So everything, every single thing. We're gonna whack a zero off. So now the notional value isn't 300,000, it's 30,000. Your traditional broker is going to want about $1,500 or $1,400, something like that, in order to control this. And then it moves $1.25 instead of $12.50, and you only need $50 to control it, and it's a lot easier to deal with in a smaller account. So if you open a account at a specialty futures broker, that's what you should Google. Don't just trust me on NinjaTrader. I use them, but there's other great options too. That's what you're looking for, is someone that has this sort of margin rate on futures. Again, I just told you how like $500 is just 10 points. So these are very, very, very volatile. So there's almost no new trader that should be messing with these E-minis. They should be in the micro E-minis, because this will still give you a feel for how everything works, and you can scale up. This is times 10. So you can start with 1, move on to 2. By the time when you get to 10, you can be here. Okay. There are options on futures as well. So you can find options contracts back at Tasty or wherever you trade your options on ES futures and on MES futures. Those also skirt the SEC's rules. So that's another thing that I used to build my account when I was just starting out and did not have a $25,000 account to trade options in. And the options on the futures is an option as well. The other thing, and I saved this for last because some of you degenerate gamblers, oh my gosh. But if you still don't have this kind of money, or you don't have this faith in yourself, or you're just ready to add, because that's what I do. I have my own account here, and now I've increased my leverage by using prop firms. And what these are, originally, a prop firm was a proprietary trading firm, and it would be an office that new traders could go to, or experienced traders, and they would learn the firm's proprietary trading method, and then they would trade it live. Because trading, you can learn things, and then you go to execute it, and you're a mess. And that's what learning to trade is learning to not be a mess in the heat of the moment. So it takes some development to get there. And so a proprietary trading firm would take this group of traders and train them to trade their plan, and the really great traders would be put into a live fund, like a hedge fund. And sometimes they didn't even tell them if they were in a simulation or had been put into live funds or not, which I kind of think sounds cool. But uh, that's why they were prop firms. Now, a lot, and I mean a lot, of players have kind of come in and started the same kind of model online. Some of them are still putting traders into live funds, and some of them are not. Some of them are just paying successful traders out of simulation accounts, kind of based on all the people who pay out a lot of fees to the firms. So that's how they work, but it gives people an opportunity to sign up for an account for a monthly fee, and then you try to pass their challenge and earn an account. And you can do this. I just suggest that you really have a plan for it, because some people get in, like it triggers your gambling, and then you're buying account after account after account, and you could have just funded one of these accounts. So pay attention to that. But if you want to learn about prop firms, I have a comparison chart on my website at bullbarbie.com/prop firms, and you can go comparison shop, and I have discount links and codes on there. Usually the code is bullbarbie, but double check, because that'll get you it should get you at least the special deal that they have on their website, and sometimes it's better. And then it sends me a little thank you. I hope that clears up the basics, and I'm telling you, I could go on and on and on and on with all sorts of details about every single little thing. So let me know what I should focus on, what would help you out the most starting here, and we'll dive into that. If you're new here, welcome. Come join us. We've got a free Discord. We've got all kinds of things happening, so you'll definitely want to subscribe and turn notifications on and all that fun stuff. And go to my website. I've got giveaways going on there, and I hope to see you real soon. Love you.